Welcome to today's Explainer, where we're going to break down all the overnight market action and get you set up for the day ahead. We'll cover everything from geopolitics to the nitty-gritty technicals.
This phrase, optimism meets reality checks, really hits the nail on the head for what's happening right now. You see, on the surface, you've got these really positive headlines, especially coming out of the US. But once you start to dig in, you find a market that's, well, it's wrestling with some pretty serious geopolitical and economic tensions. It's this classic tug-of-war, between how things feel and how they actually are.
Okay, so here's our roadmap. We're going to start with the big picture stuff, the global chessboard. Then we'll see how the markets are reacting to all that. After that, we'll zoom right into India, before we get down to the key charts and levels you need to be watching.
First up, let's take a look at the global chessboard. There are a few key things moving around the world stage right now that are really setting the tone for everyone's appetite for risk.
So, the biggest story making waves is this huge disconnect over a potential US-Iran nuclear deal. On one side, you have the White House talking up this massive 20-year agreement, but on the other side, you've got key allies sounding the alarm, talking about a much shorter 6-month timeline, and basically warning that things could get ugly if these talks fall apart. And that uncertainty, it's a huge deal for the energy markets.
And just to add another layer to this complex picture, there's a fragile 10-day ceasefire that's holding in the Middle East. Now, this has given the markets a little room to breathe, but the situation is still incredibly tense, especially when you consider there have been over 2,000 casualties already. For now, it's just a pause, not a resolution.
So, with all that going on in the background, how are the markets actually digesting it all? Let's dive in and see how this uneasy optimism is really playing out in the prices.
This chart, it just perfectly captures the market's split personality right now. I mean, look at this. You've got the S&P 500 hitting record highs. That's the optimism. But at the same time, Brent crude oil is creeping up towards $99 a barrel, and gold is still elevated. This is what we call a risk-on, hedge-on trade. It means investors are happy to join the party, but they're also buying insurance just in case it all goes wrong.
All right, let's zoom in on India. After a really nice run, the local markets kind of just hit the pause button. So, was this just people taking some profits off the table, or is there something else going on under the hood?
Now, at a quick glance, these small dips in the Nifty and Sensex just look like simple profit-taking, right? But the real story is hiding over in the bond market. That 10-year yield ticked up to 6.88%. Now, when you see bond yields start to rise, it's often a sign that money is getting more expensive, and that can act as a brake on the whole economy. It's a subtle but really important clue that liquidity might be getting a little tighter.
All right, it's time to get tactical. Let's break down the charts for the major currencies, and we'll start with the US dollar index, or the DXY, and then we'll look at the euro.
So the dollar did manage a little bounce, but honestly, the technical picture still looks pretty weak. So the game plan here is to sell into any strength. That key resistance level to keep an eye on is 98.60. The big thing today is going to be speeches from Fed members Daly and Waller. If they say anything even remotely soft, that could send the dollar right back down to test its supports.
And on the flip side, we've got the euro. Here, the strategy's the total opposite. We're looking to buy on dips. The pair is finding some pretty good support around that 1.1780 level. The big number to watch for a real bullish breakout, though, is a close above 1.1876.
So, what's the big picture here? Well, both currencies are kind of in a holding pattern. The dollar is basically just waiting for its next set of instructions from the Fed. And the euro? It's trapped between inflation that's still too high and this energy crisis that's got the ECB totally paralyzed. It's like a high-stakes game of chicken between the central banks. Let's keep going with our currency breakdown. Next up, we've got two very different stories: the surprisingly strong British pound and the totally range-bound Japanese yen.
Sterling is still a buy on dips. And why is that? Well, because the recent economic data out of the UK, especially GDP growth, came in way stronger than anyone expected. This gives the Bank of England absolutely zero reason to even think about cutting rates, which puts a really solid floor under the currency.
Now, the yen is a whole different ballgame. It is just stuck. And get this, the market completely ignored the latest warnings from Japan's finance minister about the yen falling too fast. When the market just shrugs off officials like that, it tells you that conviction is super low. So yeah, the bias is to buy the dips, but it's a very, very low conviction trade.
All right, let's bring it all back home and finish up by looking at the key charts for India, the Rupee, and of course, the Nifty 50.
Looking at the Rupee, the chart is, well, it's quiet. The technical bias is still to buy on dips, but there's just a total lack of momentum.
Honestly, this makes it a no-trade zone for now. It really seems like the smart money is just waiting on the sidelines for a real reason to make a move.
And for the Nifty 50, despite yesterday's weak close, the underlying structure hasn't really changed. The selling we saw felt more like sector rotation, just money moving from one industry to another rather than a genuine risk-off panic. Because of that, the tactical view stays the same. Buy on any significant dips with that first level of support at 24,172.
And that leaves us with the million-dollar question for the day ahead. You've got central bankers from the Fed, the ECB, and the Bank of England all set to speak. So are we going to get some clarity from them, or are they just going to create more confusion? Their words will almost certainly decide if the market's uneasy optimism can survive another reality check.